Good afternoon, this is Sean Golden with Golden & Golden, here to discuss the basics of what are 6 of the most common FBAR reporting mistakes. There's probably hundreds of them, but we have to narrow it down somewhat or else we'll all be here all day, right? So let's go through 6 of the most common FBAR mistakes that you want to avoid. By way of brief background, FBAR form, bank and financial account reporting, not an IRS form, it's a FinCEN form, Financial Crimes Enforcement Network, but really doesn't have much to do with crimes. It's reported and due to be filled out at the time tax returns are filed, so it's due April 15th, but currently it's on automatic extension to October, though that may change, so you want to check it each year. By automatic extension, it means the taxpayers who have to file it have until October, but they don't have to do anything. They don't have to file a 4868 or 7004 extension form in order to get the extension. So let's go through the 3 most common FBAR mistakes to start, right? First one is it's $10,000 is not per account, it's an annual aggregate total. So if David has one account with $100,000, he has to report. If David has 7 accounts with $1,500, that comes out to $10,500. I picked a hard math one there for a sec. So David would have to report all 7 of those accounts because the annual aggregate total of all the accounts is more than $10,000. Second, it includes more than bank accounts, right? So some people think the FBAR is just for bank accounts and foreign bank account reporting. It makes sense, right? But in reality, it's bank and financial accounts. So that typically includes your bank accounts, investment accounts, foreign life insurance policies that have surrender, cash value, pension accounts, things like that. Third, and this is probably the most important, so I apologize, I should have started with this. The FBAR doesn't have to be perfect. It's not a test, okay? So if you're missing some of the information, that does not mean you do not file. Why? Because if you knowingly don't file, then you could have now bumped yourself up into a willful scenario into which you're willfully avoiding reporting. The IRS, even though it's not an IRS form, since 2003 they're in charge of enforcing it, they don't know why you didn't file. They'll just see that it was filed late. So you'll notice on the FBAR, if you don't have the value of an account, you could put something like maximum account value balance unknown. And so it would be better, you should speak with a tax professional if you're out of compliance for prior years, and we'll get to that in a minute, and you're just going to be starting filing. But if you've had a history of filing, it's only the first time you're required to file, and you've got most, not all, the information, you should probably still report to avoid any issue of willfulness for knowingly not reporting. Some of the more other common mistakes that you should be aware of is filing forward instead of doing amnesty. Let's say this year Jane learns that she was supposed to be filing FBARs for the last 10 years. Jane just goes, okay, I'm just going to start filing from this year forward. Technically, you can't do that. Technically, that's called a quiet disclosure because you're knowingly filing forward instead of going back and not filing the prior years. If you do that and you don't know, you just think that's what you're supposed to do and you learn later, then generally you can go back and fix it. But if you intentionally or willfully go back and not report the prior years that you were supposed to file, just start filing forward in the current year, it could be a problem. Now, joint accounts, okay? If you have a joint account, you have to report the full balance of the joint account, even if you don't have 50-50 ownership, for example. Even if the money doesn't belong to you, whether it's an account, a joint account, or account of what there is no financial interest in, you're still required to report that. The no financial interest is common in 2 main situations: is your parents, grandparents, other relatives have you on the account. You can't touch that money because it's not yours. You have no interest in it, but they want you on there in case something happens. Understandable. And when you're an employee for a company and you have signature authority on the bank account. One other common FBAR mistake. Let's say you became a U.S. person later, okay? And let's say you became a U.S. person in 2017 and you've been reporting. You don't just report the accounts you have after you became a U.S. person. You have to report the accounts each time you file the FBAR. It's a snapshot of what you have under your name. It doesn't say only report the accounts that you acquired or accumulated money after you became a U.S. person. In 2020, when it says to list your foreign bank and financial accounts, you have to list all the accounts you have at that time. The fact that you might have acquired or opened some of these accounts before you were a U.S. person doesn't mean anything. And one bonus, dormant accounts are reportable as well. Okay, so if you have a dormant account, still open, still under your name, you're supposed to include that on the FBAR as well. If you're out of compliance for prior years, typically you don't just start filing in the current year. You have to go back and do one of the amnesty programs, and there's various amnesty programs available. Please don't let anyone fearmonger you. Most of the time, taxpayers can relatively simple and safely get into compliance. There's the traditional voluntary disclosure program if either you're willful or can't certify under penalty of perjury if you're non-willful. Streamlined domestic and streamlined foreign, two of the very popular non-willful programs. There's also reasonable cause and delinquency procedures. We have lots of free information available on our main website. We have we have several other websites based on specific forms and requirements, but we have a website devoted specifically to FBAR. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.